Good morning, stock Twitter, my Twitter folks. The Zor Man here, Zortrades, with a little Zortology for you. June 2nd, 6:20 in the morning. Market took a beating yesterday. Dow down 2%, S&P down 2%. Russell took the biggest hit, down 3%. We had plenty breakdowns yesterday. A lot of breakdowns yesterday, but also we had a lot of stocks like VMware that actually broke out on heavy volume, and then at the end of the day the market was just too heavy and it gave back all the gains. IPGP was just a very similar situation. The stock was up about 4 points on this little breakout here, and it gave it all back. A couple of days ago we wrote a post about the pros and cons of the S&P 500, right after we had that nice big up 1% day on the 31st 2 days ago. And some of the cons, very simple, not that it matters now, but some of the cons were the index put to core ratio closed below 100%. Now, some people believe in these ratios. Some people believe that you can't use them. What I do know is that so far this year, it's happened about 6 times, and 5 out of the last 6 have resulted in the market pullback, and that's the only data that I care about. That might be a coincidence, and if it is, it's a great coincidence. Number 2, this market has been more of a mean reversion type of market. Every time we get this thrust, and it seems like we're going to break out, the market tends to peter out, surely, very close thereafter. And every time that it looks like we're going to break down, the market tends to have some type of V-shaped rally. Also, the VIX got back to that 1550 level, where that level has been support for the VIX, and every time it got to that level, the market has had a very hard time gaining any traction to the upside. The bottom line is the economic data finally caught up to the indices. Tomorrow we have the job numbers, and I think part of yesterday's sell-off was people wanted to get light before that big number comes out. After seeing the ADP number, where we were looking for 190,000 jobs, we came in at 38,000. So I believe tomorrow's number might keep a lid on the market today, and we might be setting up for a situation where if it's a bad number, it might be already discounted. If it's a good number, we might rip higher. As far as the S&P and the markets across the board, 2 things can happen here. Obviously, we can either have one of these 1 to 3 day bear flags set up and then break down again. I think what's going to happen is that we're probably going to have some follow through. I'm not betting on it. The only way I'm betting on it is that I'm not taking any longs here. Normally, under normal circumstances, after seeing yesterday's sentiment numbers on the CBOE, I would normally be taking a stab on the long side via an ETF, because the total put to core ratio closed above 1. Normally, anything above 1 is positive in the short term. The CBOE equity put to core ratio closed above 70. Anything above 70, it's positive in the short term. But the problem is that this wound seems too fresh, and it feels too fresh. Another indicator that was positive yesterday for a mean reversion type of trade was the New York Stock Exchange trend. It closed at 436. Normally, when this thing closes above 253, you normally want to go long. It closed at 436. Again, the problem is we have tomorrow's numbers coming out. That might keep a lid on the market, and also this wound feels a little too fresh. So keep your powder dry. I sold some stocks that I didn't want to sell, but the point is that you have to raise cash, because you can always get back in, either at higher levels or lower levels. So live to fight another day. Let's see what happens today. Be a little careful buying any gap up. Allow the market to retest yesterday's low, perhaps break yesterday's low, and look for some type of positive divergence, whether it's less new lows or more new highs, or a positive RSI, whatever it is. But keep your powder dry, live to fight another day, and the market is always going to be here. Trading well, be well. I'll see you guys back on the stream.